Good morning, traders. So it's 7:13 a.m., February 7th. So we're going over a play that played out in the market, and we're going to look at this particular setup right here. And I'm going to go and I'm going to show you actually um, a chart I posted in a group earlier. All right, so this is is this it? I'm sorry, this is the wrong one, wrong chart. Let's go, let's see where you at. Here we go. All right, so this was the targeted area for the drop on US dollar Japanese yen. We want to get back down into this particular region. I was able to get in up at the top. It gives me almost a 50 pip drop move. And so that played out. So you see up here, that's the same box area. Pretty good trade setup. So I'm just going to go over exactly what we were looking at. You're going to notice in a lot of markets, you're going to have a lot of bull flags and a lot of bear flags as well too. So it's just not about um, double tops and double bottoms. You still got other patterns that can play out. And this is considered the base of a flag pattern, a bear flag at that. And of course, we got our pole. And I'm just showing you old school how you can get the targets. And of course, we get the targets still coming down. Of course, it went down a little further, but this is a good region for someone to take profit. Now, that's profit taking number one. You can take it from the top of the box, but then you can put it at the edge of the box to get some further down opportunities for some secondary targets, which you see price did come to. So it's really up to you where you want to take your profit. I like to stay within range and not go into the absolute. When you look at the chart, you can go back in time and you can see absolutes, but in real time, you don't really see absolutes. You just see regions. And we do know that this was a key market structure region. Yeah, make sure you look at lesson 1 and 2 that I posted in Telegram. It'll go over some of these market structure concepts. All right, so we also can measure using Fibonacci tool, which in the guide we go over how to set that up and some strategies on that. All right, and so we like to take trades back to between the 61 and 78% retracement level. Those could be regions of where price can come back into, and of course that's what we get. So this was another reason why I took the trade as well too, so because prices already retraced and looked like we was trying to come back into these particular region. So that was a reason why. Now, when I took this trade earlier, I like to see touches back on this top band area, this top box area. So I was looking for a favorable entry. All right. So I actually took 2 entries. All right. So I was able to get filled up here to go short. And I also had another one on this retest right here. I'm sorry, this retest price came down, came back up here. I thought it was going to drop further from right here, but instead we got a little bit more wick action back in here. So I was a little bit down on this one, and almost close to just a few pips in the money. But then, price dropped. It did what it was supposed to, so this was a successful trade. Stop loss, I still did a 30 pip stop loss from where I entered at. So my stop loss is right here. And on this position over here, saying 30 pips. So right there. these are the levels of my stop loss for the 2 orders that I put in, and we took it down to the downside. So this was a success. All right, so this is Euro JPY. Yesterday also in the group, we had posted, I guess a few members had posted about it. It was asking for, I guess, my take on it. It did look bearish. And we did say that it could go either way. And let me see if this is it. All right, here we go. So these are the target zones that I had it coming to. We can check and see whether or not it's made its way down there. I doubt it yet, but like it's trying to fight to get there. But there is a gap right here, so price may try to fill that gap. So let's go back and look at UJ. And price did fill the gap. So this was a pretty good trade setup. This was a head and shoulders pattern that played out. Basically, you want to take it for the neckline out to the head, and then you want to take you put your target length at the base, at the neckline of this particular pattern. This is your target, and targets hit. So this played out successfully from last night. 72 pip drop on that one. Of course, it went further down to about an 88.9. Now, we did say that this trade could go either way because some other things that could be shaping up. Like, for instance, it still could be if we take off all these with, with the head and shoulder stuff, you possibly could have been looking at, something like, this. And at the time, remember this hadn't happened yet, but this is what it was looking like at the time. And what did that look like? It looked like a flag pattern, right? We'll pin it. Okay. So this is the pole. And we do the pole from here. All right. So this is what this was looking like. So it could paralyze, investors. That's a target to upside, and it's a secondary target. Put it right here to upside. But it can paralyze because it looks like it can go either way. And so the best thing you can do is you could play the game of, what structure was broken, and to what downside. So we'll be playing basically with this area where we got this break, we got this retest. So this will be an indication that, hey, this might be bearish, especially with something like this forming up. So what we got to engulf this. All right. So we can look at this region, we can let it play out a little bit and say, hey, I'm not doing anything until I see what this level really violated. And we do get it. Yeah, we get a nice little retest up, but we finally drop. So we could have played it like this as well too. Another way you could have played this instead of just doing a regular head and shoulders. You could have did this impulse. All right, it's impulse right here. And it's not much of an impulse, but you see my targets on my Fibonacci extension tool. You will also learn that when you go through the Fibonacci section on the guide. But yeah, here's targets 1, 2 hit, and then targets 3 hit. All right, so that's another way you can get your targets based off of that as well too. And last, we'll finish up. Not gonna make these videos long. We can also take our fib extension, retracement tool, and we can look. Remember, I told you 61% is one of the areas we want to take the trade to. So anything between this area is fair game. So I feel like we still may have some downside pressure to get to this deeper into this box. And if we were to drop even further from where we are right now, we have to see how this plays out. We could come back and retest and drop, or we could drop from here. But let's say if we did, you still got a 68 to 72 pip range of motion. All right, guys. So that's it. It's a little bit of a technical analysis, an overview of a couple plays that people put in the chart. In the chat, I put US dollar, Japanese yen, and someone else put euro, Japanese yen, and both of them has played out like we had charted. All right. Y'all have a great one. Stay safe.